This is Randy Finney with Right Side of the Chart, and this is a midday update for Monday, August 12th, 2019. I wanted to do a very quick video, just kind of update where we're at, follow up to Friday's closing market update and the levels to watch. This is the, let me start here with the chart that I posted earlier today in the pre-market session. This was taken, you can see timestamp down here, about 10 minutes, about 40 minutes or so before the market opened today, and so the levels to watch, I said right here, 28.94ish and about 28.83. Now 28.83, what that level is that's the bottom. That roughly correlates right there with the bottom of the gaps on Monday. Remember, on the futures you won't see the gaps normally. You only have a brief period where they shut down each day, and so those gaps are usually small. This, trading starts opening on Sunday night, and the futures bled down hard. So again, that's where SPY opened up. I'll get to that chart in a second. So those are the levels we watch. Support level 1, there's some reactions there and there. That was taken out, but I want to show you what's happened since. So again, that was about 40 minutes before the market opened, and then I posted this chart in the trading room. Let's zoom in a little tighter here. You can always pan and scroll. Once you click on a chart on the site, it'll expand, and then if you have a scroll wheel on your mouse or a touchpad, you can zoom in and pan. So you can see there that all morning ES had traded 1, 2, 3. That was a fourth consecutive candle, and if nothing else, it shows that's an important level. It's a battleground between bulls and bears, and that was about 11 a.m. So several hours into the trading day. Now let's look where we're at right now. This is what I want to talk about. So here's that level. Let's zoom in a little tighter. This is a live chart, and you can see we went on 1, 2, 3, 4, 5. I mean, like, this is stopped cold. You can't get any better than that. In a period of big volatility, big swings, big candles, sometimes you get in these little areas of compression, and this is what they're like. I view these as little micro battles between bulls and bears, and like any war, if you win enough battles, you win the war. So this is just a little battle within a larger war. And the war, of course, is where's the next big move? Where's the next 5, 8, 10% plus in the market? Is it to the downside? If so, one step at a time. If the bears can win this battle, taking that out impulsively, and then I think this level is even more important there, 28.83 or so, because again, that was the top of the gap from last Monday in SPY and the S&P 500, QQQ, all that. So what's happened so far? And I mentioned this in the trading room as an update to that post right here. Here, I'll go back to that real quick. Said right after that, I said, look, right after screenshotting, they broke down. However, they whipped back. Where is it? Let's go up. Here we go. All right, so right after screenshotting, posting that last chart, ES cracked 28.94, taking out that support, but NQ was coming up on its pre-market session low of 75.80.50. And this dovetails into a comment that I just made to another member, asked about what's important support levels in SPY to watch. Said you got to watch those gaps in SPY and QQQ and NQ, but you need to watch them both. In all these support levels, because in some cases, like right now, you had ES crack, but then NQ came and made a slight dip below, but almost a successful test of the earlier low, and so what that is, as I said here, if you see that happen, and this is all kind of active trading stuff, and that's why I posted in the day trading room, but it also, if these levels get clearly taken out, that has implications for swing traders. So I'm really covering a couple things here, near-term stuff and active trader stuff. Let's go back to those charts and see what I'm talking about. So if we zoom in tight, there it is, 28.94.58 was pop briefly, and there were a few other candles below that level. If you zoom in really tight, you see the skinny white parts. Those are the candlestick tails or shadows, and you dip down below there, but you close back above it. So far we've held. It's just they pulled it down. This one has the potential to be a stop run because it came down quite a bit more. And in fact, we can see it here. I'll show you a SPY 1-minute chart in a second. And then NQ, I want to look at NQ as well. NQ, the gap is not as well defined on QQQ and NQ. It was right about here, but then we punched up a little more. So really the levels that have to go are about 75.55, and I'm going to get to QQQ in a second. This was the level I mentioned this morning, about 76.04. We tested, sliced through a little bit. We've been trading around it, and again, you have SPY or ES kind of holding support. NQ here slightly moving below, but the big levels, once again, and I'm about to flip over to the QQQ and SPY charts, are those gaps on QQQ and SPY. So what am I getting at here? Okay, we're still above. Remember from Friday's video, this was support level number 1 right here. Would be those gaps. And again, it's going to show clearer when we get to the index charts. And then beyond that, there's some in between there, but really Monday's lows. And not just a little. Sometimes the markets will do this. They'll come in, test a gap, shoot a little below it, and reverse. You'll know it when you see it. Impulsive selling, get way down in here, and then that should open the door for a run at those lows. And I do believe that if we take out the gaps with conviction, then it'll probably be a pretty quick move down. I think that should do the trick. But most importantly, as I said last week, I say all the time, support is support until unless broken. So now let's flip over to those index charts. Let's look at SPY. So you can see the gaps clearly right here. This is a 60-minute chart of SPY. You could also see those on the daily chart. There's the gaps right there. In SPY, you can see boom, 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 boom. That candle, that red one that popped in, closed right there. So that's 1, 2, 3, 4, 5, almost 6 candles you have there, and then boom, gapped up here, or had it, yeah, on the 60-minute chart. And then that was it. So we ran it. And now what we're doing is a near backfill the gap. I talk about this a lot. If you have a very well watched support level, and there's 2 ways to look at it. Let's say you are bullish and looking to go long to buy a dip. If I was bullish and looking to go long, if I didn't think there was more downside here, which I still do at this time, I wouldn't wait for a pullback to 288.22 for perfect backfill the gap. Why? Because especially in this market, again, I try to think like my enemy. It's like, the art of war, or game theory. You want to, where are the algos, which are where, a lot of this trading done nowadays is electronic trading. It's driven by algorithmic trading programs that are trying to extract money from you and I and from the market. They don't care if it's an individual, another algo trading program or a hedge fund. They want to they want to fool the masses. And what they can do, they have a lot of money and capital and buying power. So some of the bigger, buy and sell programs can take the market down either below support or reverse it. But the chances of them reversing right on 280, it does happen. It happens quite a bit. But where I'm going with this is, if that's the level I'm expecting a reversal, and I was looking to either buy the dip or cover my shorts, I wouldn't cover right on. I wouldn't have a buy to cover order on a short or a order to buy a long at 288.22. I'd cover a little bit short, because usually, or quite often, I should say, often enough, you can reverse if a lot of buyers are looking at that level. And I promise you, a lot of eyes are on those gaps. I can promise you, because I said it was important back here, and you saw it tested for a few days, and then you saw an impulsive move after it was broken out. There's that V bottom, boom, we broke out, and now we're back testing. So again, that's what's in play right now. We came close to, but we didn't fill those gaps, and that gives you the potential, if there are a lot of buyers on the sidelines right now that want to buy this market and bought the dip and they've jumped in, or a lot of shorts that wanted to just short down back to that for a back test of the gap, and they have already covered a little bit above, we could be heading up. So it meshes with what I said last week. Support is support until unless broken. So far we haven't even made a full test. We came close enough. So I'll say it this way: effectively, especially if we start to move up, then that was close enough to backfill the gap and not leave any unfinished business. Because as I often say, gaps very often are backfilled at some point in time. Not always, but quite often. So that's it. That's where we're at, and that's still the level to watch. Now, if we take another jog down, and we go through, how do we go through? Do we come down and make a big impulsive candle, a solid close somewhere down here? That would most likely open the door for that much sharper move. If we just kind of limp down into that area and then reverse again and start moving up, especially impulsively, then that might be another successful test instead of a reversal just above, just shy. So that's one thing I'm watching for today. And unless these levels go, it's not objective right now to add short exposure. Because why? Because Trading 101 says you either short on a bounce back to resistance, or you buy or you short on a break of support. And those gaps are big support. They were big resistance here last week. They were broken. Resistance once broken then becomes support. QQQ is still comfortably above the gap so far. We have some downtrend lines to watch. You can replicate these. You can see right there. So we're right now in what I call no man's land, which is smack between support right here and resistance right here, the trend line. And then of course you can see some resistance above my max bounce target zone. I really don't want to see SPY and QQQ get up there again, based on what's happened in the fade of those big green candles from, what was it, last Thursday. Ideally for the bearish scenario, we don't come back up there, and we certainly don't pop the big candles from last week. That would not be good for the bearish case. As I in recent videos I talked about the other drops last fall. Here, we'll go back here. These rallies right there, and once we had that exhaustion rally at the top, there, the selling usually starts. You go down lower and you take out the green candles that came in that buying climax. So right now, that's it. We're testing it. Bears need to do this. Take it down. Wipe out those green candles right there. That green candle, I should say, on QQQ from was Thursday, I believe. Yep, Thursday, and SPY Thursday. And if they do that, just like that back here, and those other drops here, that should open the door for more impulsive selling. That's the other thing you want to look for. See the selling begin to accelerate, and then I would think that the nail in the coffin would be an undercut of last week's lows, Monday's lows. So that's it. So there we are at a very critical, near-term battleground. Again, this is a battleground. The war is really all about what's going on in the weekly charts, the monthly charts, the longer-term charts. There's no way to say at this point in time. Well, there's no way to say anything. Maybe that was a correction. It's over. I really doubt that. I've been pretty consistent on my analysis on where I think we're going at bare minimum. Something looks like this down to these lows right here. That would be just a simple ABC correction. It would be in line with this one. It is certainly possible, but I think a little bit too easy. I favor, even whether we get a reaction there or not, which is I think likely. Probably get some more downside. But as I always say, I'll have to assess the charts as they come. I always say the charts are dynamic, and so is my analysis. So they're going to continue to develop, and I'll watch things on the daily charts, the weekly charts, the 60-minute charts. But all right, as of now, those are the levels I'm watching, and there's that 1-minute chart. Here's what it looks like. Take all these lines off. This is today's trading, the price action so far, and you might want to also watch for this. This is we're in a near-term downtrend. A downtrend is defined as a security making a series of higher, I should say a downtrend is lower lows, like that, and lower highs, which so far is that. And so very near term is looking like this. So that's what's going on right now in the markets. And like I said, we're in no man's land. We've had a couple whippy signals. When I broke today, this is what I was talking about when it slightly undercut today's lows right there. You can see support in QQQ. Right there, just barely undercut it, but not by much. It's really a successful test. So I'll wrap this video up here. This is again a 1-minute chart. This is today's trading price action right here. Let me just box it in for you. So this is the range. This is the battle that's going on right now. A little micro battle, we'll call it, between bulls and bears. And whoever wins this battle, then they go on to the next one. Unless there's a false breakdown, which is always a possibility, but you can't sit there and second guess every trade. You get paralysis by analysis. You have to formulate where you think the market is going. You're either bullish or bearish now. If you're bullish, you want to be buying pullbacks to support. If you're bearish at this point, you should probably have short positions. If not, you can either add on bounce back to resistance, maybe the top of the zone, or wait for a break of support. All right, we'll wrap it up here. We'll get this one out to you. It is just about 12 noon as I'm doing this, so I'll do another update today. If nothing else, end of day market wrap. But if anything significant happens during the regular trading session, I'll do my best to get something out to you guys. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.